My name is James Dixon. I am the program manager for the Office of Rural Development here at the Governor's Office of Economic Development. On July 1, the beginning of our new fiscal year, we will be known as the Center for Rural Development at the Governor's Office of Economic Opportunity. The department will be known as Go Utah. Our office is hosting this webinar today on behalf of the Corporate Recruitment Office here at GoEd or Go Utah. Our webinar today will be a new program presentation. We will listen to the presentation, requesting that you remain muted, reserving your questions until the presenter opens the session up for Q&A. You may write a question in the chat box during the presentation. We'll do our best to address all of your questions. This year's legislature created a post-performance tax credit called Rural Economic Development Tax Increment Financing, or REDTIF, to spur business development and employment growth in the rural parts of our state. This program will be managed by the Corporate Recruitment Office here at GoEd. Our presenter today is Daniel Royal, the Director of Corporate Growth and Business Development. Daniel, we turn the time over to you for your presentation. Thank you.
All right, very cool. Thanks for the introduction, James. Happy to be here. Happy to explain a little bit about these new changes and modifications to the REDTIF program. We do refer to it as the REDTIF when talking about projects that are looking at rural areas of the state, of course. But just so everyone is aware, it is still the REDTIF program. We did toy with the idea of splitting it into two separate programs, one REDTIF, one REDTIF, and managing them as two separate programs. But we decided just to keep it as one program and have those modifications made to the regular REDTIF, and that when a company does come in and they would qualify for those REDTIF modifications, then we just, proceed as such. And we've actually had a few. I can think of 1, 2, 3, 4 projects off the top of my head right now that are looking at expanding or locating to rural Utah. Couple in Juab County, one in Iron County, one in Cache County, and those are the ones that just have applied and have gone through the process. Not done yet, but have gone through the process. And then there are a handful of others that are starting or soon will start their process. So it's nice to see that those modifications are taking effect and are being utilized, which is definitely something we want to see. All right, on with the program here. Okay, so we're wanting first to kind of introduce you all to our corporate recruitment team here. Of course, you got me. You guys, most of y'all know me already. Worked in the governor's office for since 2012. I did take a 3-year stint out this state. So I was in Charleston, South Carolina for 3 years, and then came back in February, March. I came back to the governor's office here. So nice to be back. Nice to see you guys again. And so I'm sure you guys know Ben Hart. He's been with GoEd now for, 5-6 years or so. Was with DWS before that. Larry Shepard, hope you guys know Larry Shepard. Larry does great work. He's awesome. He's we couldn't do things without him, but he does a lot of the back end stuff, behind the scenes stuff. And then Abby Hunsaker, she's fairly new to our team. She's been there for maybe about a month now. And she helps me with a lot of the back end stuff when it comes to the REDTIF program, a lot of the paperwork and things like that. She takes care of. So, all right, let's talk about the Rural Economic Development Tax Increment Financing, REDTIF, as we like to call it. Okay, so of course we know with REDTIF program, the threshold for wages was 110%. Of course, a lot that didn't quite work well in rural Utah sometimes. So luckily we were able to get that down to 100%. of the county average wage. And of course, that wage information is adjusted annually. If you want to know what we're going off of right now, as far as the REDTIF goes, send me an email. I can tell you what wage your county is. Same thing. I've got Jim Grover on the line. He is the compliance department. If you want to know what he's going off of at a certain time of year, send him an email. He can tell you what he's going off of for your county. And so those are adjusted annually. I think, Jim, you can correct me if I'm wrong, but we're about to get the information for 2020. I guess in the next few weeks. So right now we're going off the 2019 numbers and about to hit 2020. So credit, if you're in a third-class county, like Cache County, like Iron County, and other counties like that, if you're in a third-class county, you get a tax credit up to 50%. Of course, in the past, it was up to 30%, and that's what it was for all the counties in the state. With these modifications, you get up to 50%. Now, there are certain criteria that the project has to meet in order to exceed 30%. For example, if it has greater CapEx greater than 500 million, you can exceed 30%. If you're creating 2,000 jobs, you can exceed 30%. If the project is in a targeted industry for that county, we can go higher than 30%. If your wages are at least 300%, we can go higher. And then we also look at what the local tax entity is offering as far as tax credits, increment deals, and things like that. So we look at all those things. And if one of those are met or more are met, we can exceed that 30%. We haven't had one yet. We do have a couple in the works. So it'll be interesting to see where those land. All right, so that's for third-class county. For a 4th through 6th class county, like Juab County, who has had a couple projects in right now, and other counties like that, it is 50%. There's no up to in that case, like a 3rd-class county. It is 50%, which is great. That's quite lucrative for projects. So it's great to have that 50% threshold for those 4th through 6th classes. Going back also for the up to 50%, if you're in a, and I don't know if anyone on here would be this case, but if you're in a 2nd-class county, like Utah County, like I believe Davis County, Weber County, and those counties, if you're in a 2nd-class county, Washington County is one as well. If you're in a city of 10,000 or less population in a 2nd-class county, you can as well get that up to 50% in those counties, those cities as well. And of course, it also reduced, these modifications also reduced the significant capital investments. It used to be $10 million. Now it's going down to, for 3rd and 4th class counties, $500,000, and then through counties 5 through 6, $250,000. Now, that being said, it can be less than that. So we've had projects that have been less than that, but it has significant job creation, high paying, even more than 110% high paying jobs. In that case, we have kind of had lower capital investment in those cases, but it was offset by those high paying jobs in those cases. So, but normally 500,000 for 3 to 4 classes, and then 250,000 for 5th and 6th class county. Any questions that I have on those? And you guys have any questions, be sure you can interrupt me. I know we've got some chats here. Do I have any questions? Jeffrey's nice to see you too. Thanks for the chat there. If no questions, I shall move on.
I have one question, Daniel. It might be helpful if you guys could actually put together just a kind of a number template to show how this works. We, just make up a project and show how this works. Just the number side of it. Sometimes just reading through things like this, that's not as helpful as actually
Yeah, it was a bit
seeing.
nebulous.
Yeah, that would be really helpful.
Kind of a fake project, case study type thing.
Yeah, that would
Yeah,
be
we can do so.
great.
Yeah.
If
Yeah, we
it's
can
not
do
too much trouble.
Nah, not at all. Not at all. Yeah, that'll be nice. That'll be nice. Yeah, we'll go ahead and do that. That's a good question. Any other questions
you.
before I move on to the next slide?
There's a couple of questions in the chat box.
Cool.
How many years are the tax credits available for, and after the project begins? And then the second question is, does the CapEx have to be for physical capital expenses?
Cool. Yes. I'll be happy to answer those questions. So, Kevin Anderson. Kevin, I don't think I know you, but I look forward to meeting you. How many years are the tax credits are available for after the project begins? Good question. That depends on the project. Depends on the company. So there is what we call an FIQ, fiscal impact questionnaire, and we'll talk more about this in a subsequent slide. But we give that to the company or a consultant, site selector, or what have you, to fill that out. We ask the company to forecast as far as possible. You know, some companies do 10 years, some do 15. We have companies that have done 20, 5 years. I think the average is like between 5 and 10 years. I know 6, 7, 8, somewhere in there. And so we ask the companies to forecast as far as possible, as far as job creation, capital investments, wages for those jobs and things like that. So if a company fills it out and they do 10 years, and we just had a company do that I received. They did 10 years. And so we can go as far as the tax credit availability, we can go those 10 years. A lot of times we'll get a project in, you know, it's 5 years. We'll go back to the company and say, hey, can you give us more? Because the more jobs you have, the longer you go, the tax credit becomes more lucrative. So, you know, for those type of projects where we love the project, we want the project to be here, we'll go back to the company and say, hey, can you give us more? And many times that's the case. We'll go give more. Sometimes, you know, companies don't. They go as far out as they can, you know. But in that case, we ask for more. But to answer your question, Kevin, is as far out as the company gives us. And so, unfortunately, that's the open-ended question, open-ended answer. Depends on the company. Zachariah, does the CapEx have to be for physical capital expenses, or would wages count with job growth count? Well, the CapEx would be, physical capital expenses, building, equipment, tenant improvements, so on and so forth. As far as the wages go, we'll count that in a different bucket, and that would affect, of course, the tax credit that you can receive. The higher the wages, the more wages there are, as far as, you know, more employees, the more lucrative the tax credit can be. All right, Brent asked, tax credit is 50% of what specifically? So the tax credit is 50% of 3 buckets. We look at your company's withholding tax, and this happens all after, of course, after we go through the process. This is compliance. Jim Grover and his team, they'll look at those 3 buckets. They'll work with DWS, they'll work with the tax commission to find out how many employees a company created that year, how much they paid in withholding tax, how much they paid in sales tax, and how much they paid in corporate income tax. So those 3 buckets are what we look at for the tax credit. So we'll add all those up, and then 50% of that is what would be received as a tax credit for a company. Very good questions. All right, going on to my next slide. All right, the application process. This is a question I get a lot. Fairly straightforward process. It can take anywhere between 6 weeks to 2 months, depending on when the company sends in the application. The application is online, so we do start with an introductory call or a meeting with me and my team and the company. We do ask that kind of interaction does happen before having a tax, getting the application. Of course, we work a lot with EDC Utah, and they're great at setting those up. You can come to us directly as well. If you have a company in your county, they're looking to expand in your county, and they qualify, you can come directly to me and say, hey, I've got this company, let's get on the phone with them, and we can definitely do that. Some questions that you might want to ask before: is a company creating at least 50 plus jobs? And 50 plus, that's kind of a historical threshold that we've used. Hey, if the company is creating 40 jobs, but they're great jobs, high paying jobs in a industry of need, they're filling a gap in your county or anything like that, we'll go with it. But 50 is kind of our historical threshold there, but it can definitely be lower than that. And are the wages 100% or above? Those are the two questions really that we would want you to ask before coming to us with that initial meeting with the company. So when we do have that meeting or that call with the company, everything checks out, 50 plus jobs or great jobs, high paying jobs, we'll invite them to fill out an application. Like I said, application is online based through our Salesforce. Myself or Abby will set that up in Salesforce for you. Once that person has, once the application has been set up, that person, the contact of the company or the site selector or whomever, will get a notification that it's been set up and that's ready to be filled out. And then, so as far as the process goes, once they send in the application, and we'll talk more about what's in the application in a sec. Once they send in the application, we will review it internally, and I'll tell you what we'll look for in a sec. But there are two big milestones when it comes to the application process. The first one is the incentives committee. We just had an incentives committee meeting yesterday. That happens well, we'll talk about that in a second. So incentives committee is the first one, and then the full board meeting is the second milestone. We'll talk about that in a sec. We do ask for the municipality or the county to have what we call skin in the game, that you're offering something. That can be from expedited permitting all the way up to, you're offering tax credits or some a TIF or anything like that. They're in an RDA or what have you, but we like to see the local government offer something. All right, looking at the chat, got some more questions, it looks like. Let's see. All right, Jenna, I believe there is a cap of 20 years on the TIF. Yes, there is a cap of 20 years. So that's as far out as we ask for a company to go. So we can, that's the most we can do is 20 years. 50 plus jobs is a big lift for rural Utah. Sure is. Let's see. Would a letter of support from an AOG work as well? Yes. Yeah, that would work for sure. What would job threshold be for fourth class counties? Now, job threshold is not in statute. That is not in statute. Like I said, historically, we've done 50, but it's not in statutes, which is why we can be agile when it comes to that. If a company is looking at, like we had a company, last year before my time, looking at Hilldale, Utah, in Washington County, and very small town, great jobs though. But so if we have something like that where it's great jobs, town that's it would lend to their economic diversity. It fills a need, it fills a niche, it fills a void, it fills a gap. We can definitely look under 50 jobs. I'd be very open to doing that. But like I said, that 50 is not in statute. Historically, that's what we've done, but I'm very open to looking at lower than that. Of course, the tax credit wouldn't be as lucrative or as attractive. It's hard to get those numbers that look good, but we'd be open to that. All right, next slide. Okay, so what we're looking for in the application: properly filled out FIQ. Again, the FIQ stands for Fiscal Impact Questionnaire. And I can send, if you need, I can send you a blank FIQ just so you can understand what it looks like. We will be kind of tweaking some things here soon, especially since now those modifications are going in effect. We have to tweak a few things, some of the equations, so that it does reflect 100% instead of only 10%. But that's where a company goes in, they fill out the jobs, how many jobs per year they're creating, what the wages would be, what the benefits would be, what their capex would be, what their forecasted corporate income would be, income tax would be. And then the FIQ automatically calculates all those things for us. And then once I go in and look at that, look at what type of jobs they are, look at the pay ranges for those jobs, and look at what type of project it is, then we can determine how much we can offer incentives. And a lot of what we offer incentives, it has to do with history. We do comparisons with what we've done in the past. Those comparisons now with the REDTIF modifications kind of aren't as applicable as they used to be. But they're good starting points. We can see, okay, this is a similar project, we've offered this. Well, not, but this isn't real Utah. So we can, inflate those numbers, add percentage to that and things like that. So we look at the properly filled out FIQ, and more times than not, they're not properly filled out, which is fine. We'll go back and say, hey, this is what's missing. This is what you did, what you need to this. So that's fine. That doesn't really, hinder the company at all. 3 years of financials is what we ask for. In financials, we look at balance statement, income statements, and cash flow. I always forget that last one. Cash flows are the three things that we look at. Now, sometimes we've had companies who were hesitant to give us that information. In those cases, we did make arrangements for them. They were hesitant because of confidentiality issues. We made arrangements why we'd sign an NDA or anything like that, but we have made arrangements for companies who are hesitant to give that information. Now, we do ask for 3 years financials. Sometimes it might be a little bit less. This is a rare kind of thing that we've done. For example, if a company comes to us, a tech company, they're under 3 years old, and the numbers, even though they did have them, don't look great because they're investing, they're burning money. They're trying to get up and running. If they can demonstrate their fundraising, we can look at their Series A, Series B fundraising. We can look at what investment they've had, what their venture capital looks like. Some names that we can recognize, and look at the profile of the company leadership. If they're someone who's been in that industry for quite a while, they know that industry. We're working with a company right now that's that case where they are a fairly new company, but the profile of the leadership, they've been in the industry for quite a long time, and they've got relationships, they've got contracts and things like that. So we can, instead of the 3 years of financials, we can make those arrangements. Like I said, it's rare, but it's doable. A concise company overview and project overview. We definitely need to know. We want to know who the company is, and if they're hesitant to divulge the company, we'll sign an NDA. That's no problem. But by the time we get to the application phase, we do need to know who the company is, and we need to have a concise project overview. Lower than high level. We need it to be as detailed as possible on that project overview. One of the big details that we do need is the competition. Of course, the REDTIF program is a but-for type of program. But for this incentive, the company wouldn't have come here. So we need to see what the competition is. And it can be, of course, neighboring states. It can be non-neighboring states, anywhere in the US. It can be international as well. I worked with a company recently that they were thinking about setting up an office in a different country. And so that country was our competition, but we do need to see the competition to know what we're up against. The application does ask what the competition is offering. I have never received an answer to that question because it's confidential, of course. If a state is offering a company an incentive, it's going to be confidential. So that's fine. But sometimes they do divulge it. All right, looking back at our chats, FIQ, Malcolm, yes, fiscal impact questionnaire. That's where they put all the job and wage information, capital investment information, tax information, and that's what we use to calculate our incentives. If you need to have a blank copy of that, I can send that to you. If you want to have a phone call to see how that works, I can send that. We can have that so you can get more familiar with this FIQ. All right, dates and deadlines. Here we go. Okay, so applications are due the second Thursday of the month. You'll see below, that's also the same day as a full board meeting. I did that on purpose because usually that week before the board meeting, we're bogged down with board meeting stuff, getting everything prepped and ready for the board meeting. So it used to be the due date was the first of every month, but I was getting them in the first, and I wasn't even reviewing them until after the board meeting anyway. So I figured I might as well move that date to the same day as the board meeting. The second Thursday of every month is when I'd like to see those applications in. Though that's not a fast and hard rule. If they get it in that Friday afterwards, that's fine. Especially for companies that I've already met. I know what the project is and things like that. We'll still get it. Especially now that Abby Hunsaker is on board, she's taken a lot off my plate, which means that I'm now free and open to focus on other things, including applications. And so if you get it on that Friday, if you get it on that Monday, not a big deal. We'll still fit it in. No guarantees though, because if I do have to go back to the company and they're missing a bunch of information, so on and so forth, there's no guarantee that I can get them in for that next incentives committee meeting, but I'll still accept the application. All right. Speaking of incentives committee meeting, that is the fourth Thursday of the month. Like I said, we had that yesterday. So every fourth Thursday, we have that 100% virtual. It used to be in person, 100% virtual now. It is a closed meeting. We've done that on purpose. The reason is because it allows the incentives committee to ask some deeper diving questions to the company. And typically the answers to those questions may be confidential, may be of a confidential nature. And so we keep that as a closed meeting so that the company doesn't have to worry about that information being made public. So it's a closed meeting, and that's why we do that. Virtual also for the company that don't need to attend if they don't need to. We also like to have, like I said, we would like to have a company representative there, and we also like to have local representation there as well. Because we'll ask some questions to the company, but we'll also ask questions to the local representative. What are you offering? What kind of benefit does this offer the community? So on and so forth. And only a local representative can answer. And we've had great turnout, great representation from the local municipalities and the counties, in some cases both. So we do appreciate those who have been to our 100% virtual incentives committee meeting. We do appreciate that. But during those meetings, we ask the company to give about a 5 to 7 minute presentation, talk about the company, talk about the project, and then we ask, the incentives committee asks questions. So we do another about 10 minutes of Q&A, including questions that we ask to the municipality or the county representative who is there. So in a perfect world, it's about a 15 minutes process during that incentives committee. The world's not perfect, so it tends to go longer than that. But we need to make sure, of course, that the company meets the criteria, that the incentives committee has a good grasp and understanding of the project, the company, what they're trying to do, and to make sure that it's a benefit to the local municipality. So it does go over 15 minutes. We're working on that. We are definitely working on trying to reduce that, but it does quite often go beyond that. All right, so in the case where the incentives committee, so backing up just a little bit, When I review and evaluate an application, I make a recommendation with help from Ben, from Larry, from Abby, with help from them, and from the comps as well, the comparisons. I make a recommendation to the incentives committee on what we can offer. It's called a staff recommendation. The incentives committee looks at that. They look at the financials of the company. They look at the comps, and they determine what they would recommend to the full board. Sometimes they take what staff recommends, sometimes they don't. And the times that they don't, sometimes they increase the percentage. Had that happen quite often, where they say, this is a great project, this is a great area, an area of need, a project of need, let's increase what we're offering. Or there's stiff competition, let's increase what we're offering. Sometimes they reduce it. This is not great jobs, or there's not many jobs, or there's not an area or an industry of need. So it's possible that they can reduce it. I haven't seen it yet, but it's possible. Like I said, I haven't seen it yet, so no fear. So the incentives committee will make the recommendation to the full board. During that time, I send a letter to the company, the site selector, whomever, with what the incentives committee recommended. And we need that signed. Ideally, we need that signed the Tuesday after the incentives committee. So yesterday was incentives committee. I sent the letters out yesterday, I sent one out today. Ideally, we'd like to receive that back on Tuesday, so that we know that the company is ready to move to the full board meeting. If you need a couple of days, don't tell Ben, but I'll give you a couple of days. Just don't let him know. I'll give you a couple of days. I don't think Ben is online either, so we'll keep that a secret. All right, so the full board meeting, second Thursday of the month. Usually it's 2 weeks after incentives committee. Sometimes it's 3. I do like the 3 weeks because it gives us more time to play with, but usually it's 2 weeks. It is a public meeting. It's very much similar to the incentives committee meeting in process. We do invite the company. We do invite a local representative from a local government, saying we do the presentation, we do questions and answers. We ask that the presentation be a lot shorter, 1 or 2 slides. This is the company, this is the project. Then some Q&A, especially from the board members who aren't on the incentives committee. They can ask those questions. And then the incentives, the full board, they vote on the what recommendation will be made, if they accept the incentives committee recommendation. And again, they can bump it up or lower it. I haven't seen that yet. They usually accept the incentives committee meeting recommendation. But when they vote, they pass the motion that formalizes a company's acceptance into the REDTIF program. And then we enter the contract phase. You work with me, you work with a gentleman by the name of Michael Hall, who's our contracts guru. We work a little bit with Jim Grover and his team, and we get that contract done. And then the company can start their project. The company, they choose when they start their projects. They have 2 years to start it, but it doesn't have to be, January 1st or July 1st or anything like that. They can choose when to start it, and then we'll go from there. All right, any other questions that I have? I don't see anything in chat, so I think we're good. All right, next slide. Oh, wait, that was the last slide. Okay, going back to this again, so you guys have our contact information. If you have any questions, any concerns, if you're wondering something, call me. I don't want to be some man in the high tower where, it's just an idea of, oh, there's someone who handles incentives, never met him, never talked to him, but I know he exists. No, I want you guys, if you have any questions, call me. If you want to meet in person, let's set it up. If you want me to come to your county to, view some sites, so on and so forth, I'll be there. You guys know me. You guys know I love rural Utah. I worked in the rural office for 3 years, worked under Dylan Fielding. I'm sure many of you know Dylan, worked under Linda Gilmore. I'm sure a lot of you know Linda. And of course, worked with the Energy Office, doing rural programs as well. So you guys know me. I'm not some mysterious guy who you never get to talk to, you never see. If you need me there, I'll be there. If you need me on the phone, I'll be on the phone, okay? I'm very open to that. All right, looks like I've got some questions in the chat. Let's see. All right, Brent Tolbert, would CapEx include investment in a pass-through entity that holds the primary physical assets? That is an excellent question.
Is this a phone a friend moment, Daniel?
Yeah, I was about to say, Jim, can you,
Do you want me to take
one?
this? I started typing out the answer here, to support Daniel. What a great question. So when we look on the compliance side, once the project is started, a company is going to be filing annual reports. And the company is going to be able to show, hey, here's what we purchased. And what we're looking at specifically is it for the project? And we also, like, as we look at the entity and the entity structure, basically who has the contract, we can identify, okay, here's an LLC, maybe it's a holding company, they're holding the assets, right? That's usually what happens in these cases is a company has several, say ownership structure. And we look at, okay, here's the asset, this is where it's placed into service, and here's the amount of sales tax that's associated with that capital constructed project. So we look at who's paying for it and where it's located. And in many times, right, it's included in the umbrella of the project and the entity. So if that was helpful.
That's great. Thanks for that, Jim. I lean on Jim a lot. He's been with GoEd for quite a long time. So if I have a question in my mind or receive a question I can't answer, Jim is always the first one to call. So I appreciate that. Do I have any other questions?
Hey, Daniel, this is Ryan Starks. If I could just chime in as well. So this is like a wonderful partnership between our rural team and our corporate recruitment team. So many of you on this call typically go through Nan Anderson or James or Rebecca or me. And if you ever have questions related to REDTIF, you're still certainly welcome to reach out to us as well. And so this is kind of where the partnership comes into place. Daniel and his team, they can only cover so many miles, but between his team and our team, we feel like we have a pretty good grasp on the state and who's doing what. So feel free to reach out to Daniel. He's awesome. If, however, you have questions and you want to reach out to one of us on the rural team, we're also happy to walk you through the process and make the connections necessary.
Yeah, certainly. If you guys want to reach out to them, you have a question, I know if they can't answer, they can definitely come to me and answer that as well. I've got full faith and trust in our rural team to answer the questions, but if they can, they definitely come to me. And like I said, you guys can come to me directly as well. Not a problem at all.
We like to say that Daniel used to be part of the light side, but he went to the dark side when he joined corporate recruitment and left rural. So.
I got promoted.
or demoted.
All right. Any other questions? Any other questions we have before we wrap up?
Yeah, so if there's anything, even on the open mic, if you'd like to unmute and ask Daniel directly, please do so now.
If not,
hey,
I guess I surprised
Daniel,
myself and did a good job.
This is
sure.
Daniel. This is Steve Neeleman. I'm on the GoEd board and chair of the incentives committee. I just want to tell you, great job. And I know I see there's a few people out there in rural Utah I'm friends with, but these guys will take care of you. I was just going to make that comment, but thank you for doing this and great job.
No problem at all. Yes, thanks for hopping on, Steve. So Steve is the chair of our incentives committee and also on the full board. So it's nice to have him on here. I see a question by Brent Tolbert. I'm sure Jim is all over that, so I'll let Jim answer that. But any other questions, guys? Like I said, you can call me if you have any questions. Email me. You've got my email there. If you want the blank FIQ, I can send that to you. If you want to see a blank application, I can send that to you as well. We've got some, hard copies of those just for people to look at.
Yeah,
And if
looks
nothing
like
else, James,
time to
I'll
wrap
throw it
out,
back to
right?
you.
Yeah, thank you, Daniel. We appreciate your presentation. It was excellent. A lot of information. So I know that there will probably be questions that come up later at another time or when the opportunities arrive. As Daniel has said, reach out to him directly for answers to questions. But even if you currently have right now a business referral, please connect to him directly and see if we can't help these businesses come here to the state and help us grow jobs and help us grow businesses throughout the rural areas of our state.
One last thing, James. We also can do what we call estimate letters. So if a company's wondering, okay, how much would I get? Here are my numbers. How much would I get as a tax credit? We can do estimate letters. And that's especially beneficial for when companies want to compare programs too. Would this program be more lucrative than that program? So I can definitely write it'll be a range. It won't be a specific number as far as what we can offer, but we can do an estimate letter.
Can an estimate letter be directed through an Abby Hunsaker as well, or directly to you? How would you prefer?
You can contact her and ask for it. It'll come from me. But yeah, you can reach out to her, Larry, Ben, whomever, to get that estimate letter.
Very good. Thank you so much, everyone, for attending today. Again, Daniel, thank you. Excellent presentation. And we look to see great success in rural across the state for this new program. Thank you very much, all. And we will end our presentation now. Thank you.
All right, everyone have a good one. Thanks, James. Thanks, Rural Team.